Good morning, everyone. This is Heather here. It is Monday, March 8th, and for those of you that have been following um, the saga of Sherman, he got up and walked on his own in the middle of the night last night. He got up and did some circles, looked at both of us like, because we were like, oh my God, you're standing, you're walking, and he's looking at us like, what are you looking at? Yep, that's pretty much what he said with his eyes. And then he plopped back down and went to sleep. It was a great way. So today is officially a magical Monday, even if it doesn't feel like it here as we look at the future. So here we are. The NASDAQ in particular is down about just shy of 1.3%. And here are the S&P right here on the screen. You can see, look at that 50. The blue line here is the 50. And this is a pretty decent line here to watch. Don't just watch the SPY. Go in and look at the futures because there's just so much more data in it. I feel like it's a little bit better of an indicator. That being said, obviously watching the indexes makes sense too. There's lots of different levels there that are used, and you'll see them in whether it's in like Trade Exchange or Benzinga. You'll say, traders talking about this technical level, and those are either on the futures or on the actual index itself, not just the SPY, which is the mini, the fund for it, but the actual S&P. They'll say, well, maybe 3,800 is that technical spot that traders are watching. So it's important to kind of look across, not just SPY, not just the futures, and not just the actual index itself. So kind of keep that in mind as you're trading here. But we're still in a pretty precarious spot, and that's really what I'm coming on here to tell you today. And I've taken all kinds of time to say that, but we are in a precarious spot here. We're still using that 50. Friday was a good day in the overall futures in the market because we had these red volume days that we had. Look at the volume, right? These red candle days, lots and lots of volume, but it wasn't met with much coming back at it. Okay, so yeah, heavyweight versus lightweight, right? Well, on Friday we came in and actually put a bit more of a fight up on the bulls did, right? And compared to the bears, it was pretty nice. Now it didn't beat it, obviously. You can see that here by the volume, but it put in a nice fight. So this 50, I feel, is a really decent level that we need to continue to watch. And you can see the 50 here, even though we've dipped below it, it's the 50 that I think in the longer term of mine, that's the one we need to watch. There's plenty of room down here to the 200. In the market news tab, please, please, please go watch the Chris Shavako video from this week. It talks about the week leading up to Friday, but then Friday was very different. And so they did, it's like at minute 32 or 34, I can't remember now, they actually do a recap of what happened on Friday. And I just think it's a really good reminder to us that we look through the week, and I don't know, I had people sending me emails or text messages because I share my phone number with people, and they're like, see, I told you it was going to turn, I told you. And I'm like, yeah, well, eventually we're all going to be right because it's going to go both ways. But what's important to know is that then on Friday, because they had gone all to the put side, Friday came and they're like, well, that didn't work. But that's why we need to follow the candles and watch those levels. Doesn't mean that this 50 is going to be the stand. That's not necessarily the line in the sand. It just seems to be right now. It could be that 200 eventually. And somewhere in there's 100 moving average that I don't have on my chart. So, okay, all of that, I'm going to let that go. I want to look at just a few things here this morning. I didn't really set anything up because I didn't love anything other than looking at financials. The treasury yield is up, pulling our markets down. They passed the tremulous the stimulus, I hate even calling it that, but the 1.9 trillion spending bill, that's what we're going to call it, the spending bill. And so the treasury yields are pushing a little bit higher. The financial sector and XLF in particular is doing well. And I am in this, right? So I took really nice profit out of the first trade that we had, and I took that in 2 bites. And now I'm in a little bit longer of a trade. I don't have a sell set on it yet. But if you find it and you're like, wow, I'm up 20%, I'm up 15%, and you're really happy, at least take some off. You can always come back in on a dip, or if it gets to, say, another level, maybe it's going to break out of a level. Maybe you have a trend line and it looks like it's breaking out of that. you can add the part back, right? And it's okay if you add higher. That's always a good thing. That means that your trade is working in the direction in which you want. So watch XLF. If you want to trade a specific name, look at the names. I like JP Morgan. Morgan is setting up this pretty nice little flag, and this morning we're right inside of this candle. So you can see that there's a pretty decent level here above 153.45 and then 154, I'm going to say 155, right? So I think a nice entry would be in that 153.45 area. So take a look at charts that are setting up in nice trades. In the financials are doing very well. The other area that is continuing to do well, this is pulled back a bit here this morning, but oil, energy, right? Great, great week. We're just below a monthly pivot at 53.20 here this morning. So, but we're still higher than we were on Friday. So don't just chase into any of these. Energy is actually off of its highs here from this morning, but keep a good eye on these. So XLE is just an energy ETF, but you can look at names like Chevron. I like Chevron. I happen to really like ExxonMobil, right? These have done very well. There's plenty of other names. There was some option activity mentioned on Friday, not just in the like in Cheddar Flow, which there was, but like the Darians picked it up, and MRO, so Marathon Oil. You have ConocoPhillips. Look these up. If you don't want to play a name, go to the larger sector. But there are plays out there. I'm just going to ask that you use caution. Remember that cash is an incredibly important position to have in your account, so that when there's, maybe you like playing a specific sector and that sector starts picking back up again, or we rotate back into it, whatever the case is, then you have something to play with. Don't just trade because you feel like you should be trading. Not every day is a good trading day. In fact, I would venture to say that you're probably half and half on what is good trading days versus poor trading days, especially if you're not that day trader that's just in and out and in and out, in and out, in and out, and oh my goodness, couldn't do it. I just couldn't do it. Okay, that is it for me here this morning. Again, if you have any questions, as always, write to me, Heather C at givingtreetrading.com. You can always send me a private message, and I really hope that you look at some of these and ask lots of questions. Don't just follow somebody. Don't hold on to something because somebody else is, or don't just get into a trade just because somebody else is. Make the trades your own. Look at what everybody else is looking at in the room. Try and figure out what it is they're seeing. Ask them if you don't understand. Ask me if you don't understand, and we will get through this. But you learning to trade your own trades is the most freeing spirit feeling you can have when you're trading, is being able to set that up on your own. It's empowering. It's extremely empowering. Okay, everyone, have a magical Monday, and I will see you soon.